Bitcoin Capital.
Thank you, Jesse.
Thanks to you.
Great, Yves, maybe we can start with you. Do you mind introducing TOBAM Investments and explain the Bourbaki spirit that underpins your organization?
Okay, so TOBAM is a company that I have launched in 2006. We run today about $5 billion of AUM. 68% of our clients are in the US, and 60% of our clients are public pensions. We work mostly for very large investors. We started our business by proposing the maximum diversification approach. The idea at the foundation of diversification, and very funnily, there was no measurement for diversification. So we looked for a measurement of diversification, which we discovered. Today, our diversification measurement is part of the curriculum of the CFA. It's also used in botanics and in biology. And when you can measure something, you can maximize it. And this was our first offering at TOBAM. It's the portfolio that maximizes diversification. The second offering was started in 2013 when, we have a relatively large number of mathematicians in the company. We are 40 people, of which 17 are mathematicians. And in 2013, we discovered a new gadget called the Bitcoin. So we looked at it from a mathematical point of view with curiosity. At that time, it was really a gadget. And when we realized we were a few of us looking at this object in the company, we organized a monthly dinner that would take place systematically every month in a pizzeria. Because there is a very funny relations between Bitcoin and pizzas. So it's during one of those meetings in 2016 that we took a major bet. And the bet was that a time would come at which the largest institution in the world would own Bitcoin. And we have decided to implement this bet by launching the first open-ended fund invested in Bitcoin in the world. This was in November 2017. We wrote an investment thesis on the Bitcoin that we present later, encouraged us to launch an open-ended fund based on the Bitcoin, which we did, as I told you, in November 2017. Later on, we wrote investment thesis on DeFi, on Ethereum, on NFTs in the world of art. And the more we did research around crypto, the more it strengthened our choice to focus on Bitcoin, in fact. It is a bit part of the story of TOBAM. I may end up with Bourbaki. Bourbaki is a French mathematician, a very famous French mathematician that never existed. It's a group of mathematicians that in the beginning of the 20th century, they realized that the discussion, the dialogue between mathematicians from across the world was becoming more and more difficult because of the lack of common definitions of the mathematical objects. And in fact, if we don't define properly the terms, you and myself, Jesse, very quickly the discussion is going to become tough. So they had the idea to rewrite the whole of math. And they formed themselves as a group called Nicolas Bourbaki, and they rewrote mathematics. So one of the points that we try to always respect at TOBAM is to systematically well define the terms we used. This is called the Bourbaki spirit.
That's interesting. A lot of questions on the back of that. So what attracted you to Bitcoin initially? I think, I became interested in Bitcoin about the same time. At that time, I was working at Barclays. And for me, it was more from a kind of macroeconomic perspective. The ripples of the global financial crisis were still playing out. And Bitcoin kind of appealed to me from that perspective. Was it that from the macroeconomic perspective that attracted you to Bitcoin, or was it more on the mathematics side, the program scarcity, or what was it?
In the very, very beginning, it was more, math and IT. In the very, very beginning, and after a couple of weeks, I had a eureka moment when I discovered something completely crazy, which is the limited amount of Bitcoins. And in the beginning, I was not even aware of that, of the 21 million. And after, I would say 10 days probably, I realized that, 50 plus 25 plus 12 and a half, etc., times 210,000 makes 21 million.
Yeah.
And suddenly I realized that Bitcoin was even stronger than gold.
Yeah.
And I realized that the only equivalent of Bitcoin in the real world is Picasso's. In my mind, Satoshi did not invent digital gold. He invented digital Picasso's in a way. The number of Picasso's is effectively limited. The number of gold, the quantity of gold is unlimited, in fact, in the universe. And this guy invented, in my mind, he really invented the real version of what money should be. And this was a really eureka moment for us. We came to the Bitcoin via mathematics and IT, and it took us 10 days to understand that this was of another dimension. It was not about mathematics and IT, it was about money.
And what was it like launching that open-ended fund in fourth quarter of 2017? How did, because I was doing stuff in Bitcoin in the industry in 2017 as well. And the interest in first quarter 2018, it just dried up, right? As soon as the price started to roll over, I think there was a lot of concern that it had run its course. It was a fad. So what was that experience like, launching one of the first funds?
Is very funny because we worked on that with the regulator on a relatively confidential basis. And at the end of November 2017, we issued the press release. And the reaction to the, so we were on the cover page of almost all the financial newspapers, probably in the world, in the Financial Times, in Switzerland, in Germany, in France. And then we began receiving reactions from institutions. And I'm going to give you one example. The CEO of one of the largest institutions in Europe wrote me a letter, a personal letter, telling me TOBAM has a very strong reputation, and I should not do that because it's going to ruin our reputation. We are going to fund terrorism and drug traffic. It was amazing. This was really the kind of reaction we had. There were some people that were more open-minded, but I would say that there is a line in the middle of the Atlantic that's segregated between two reactions. I usually say that most of time, when there is a technical innovation, in Europe, we'll look at it from the lens, or is it good or evil? In the US, they will look at it from the lens of does it work or not? So if it works, let's take advantage of it. When in Europe, very often people will look at a new technology and they will try to understand whether it's good or evil. I usually ask people, is a knife good or evil? A knife has nothing to do with good and evil. A knife works. And if it works, let's try to take advantage of it. And the reaction is really about that. And more in Europe, it was about good and evil. And more in the US, it was about does it work or not? And if it works, let's take advantage of it.
So
this was the kind of reaction we had.
So most of the pushback and maybe the criticism you got came from people in Europe?
Yeah, absolutely, yeah.
Interesting. Well, Alexandre, I want to give you a chance to bring you into the conversation as well. Can you tell us about your journey with Accenture and your experiences in digital assets, and what are some of the focuses of your team? I think you're working on some really interesting stuff as well.
Sure. Well, Yves has been very impressing with his pioneering in the space. So quite hard to come after Yves, of course. But yeah, I'm leading the digital assets team at Accenture for France and Benelux, and as well leading the offering for digital assets, native digital assets over the global blockchain team. We have more than 200 people at Accenture dedicated to blockchain technology, over half of it dedicated to financial services. And I would say there has been a major shift that we have observed through, of course, BlackRock ETFs and all of that. But where before our activity was 30% Bitcoin crypto assets, 70% other type of activities, from central banks to tokenization. Now it's completely reversed. We are now at 70% of our activity dedicated to native digital assets here in France and Benelux. And to give you an example, here in France, we've been working with 4 major banks and also some corporations, and it includes digital asset custody strategy. So how to build institutional grade capabilities for custody. It includes, of course, Bitcoin as an institutional asset for treasury, for payments, which is not a use case that is still it's still emerging, but it's coming as well. Of course, the case for cross-border payments, global transfers of money across the world with digital assets, and as well the tokenization. So the tokenization of any type of financial assets. And we will be able to talk about it later on, but there is a big acceleration that has started since the Bitcoin ETF approval.
Why do you think so much of the institutional focus has been on Ethereum? Do you think it's like Yves mentioned, where you first find out about Bitcoin, you do research on other things, and then you come back to Bitcoin? Or how do you explain so many people over the last couple of years focusing more on Ethereum than on Bitcoin?
So actually, it's quite interesting because, as you know, Bitcoin is the overwhelming majority of the value in terms of market capitalization. However, in terms of innovation teams, digital assets teams at major financial institutions, people have been focused a lot on Ethereum, and I would say 90%, even 95% of these teams. And it's quite understandable because of the programmability aspect, and we have really to decompose and to distinguish between the asset and the technology. So people can use the technology to have more efficient processes. And it's been a majority of our activity, let's say 2 years back, 1 year back. But the pushback that these teams also have got from their top management is the ROI. What is the return on investment on the application of these technologies? And so far, it's not given the fruits because it takes a lot of time. It will take 5 to 10 years for tokenization to really take off in terms of ROI. But so that's why I mentioned the Bitcoin ETFs was a key shift, because if you compare the focus of digital assets innovation team with the idea of the board, typically when we do board discussions, the question is always about Bitcoin first, because they see the asset, they see the involvement of BlackRock now, and the inflows of Bitcoin ETFs cannot be unseen as well. So the focus has really changed, I would say, and now the focus, 70%, we will be able to talk about it later, but we have done calculations and business case for major financial institutions. 70% of the business value until 2030 is on Bitcoin and crypto asset markets. So now the priority for investments at board level, at CEO level, is how do I generate ROI for the next 3 to 5 years? And now with the Bitcoin ETFs, and you've seen a lot of European banks moving this way as well, and more to come. This is really what is happening is first, let's get a real business on Bitcoin and digital and crypto assets. And let's use this as a base for including technology as part of our processes as a bank to really improve the cost that implies running financial asset issuance and tokenization and settlement. So really distinguishing the asset and the technology here, I think, is very important.
Yeah, that's interesting. I mean, I think securitization. So a lot of the focus, I guess, from what I'm hearing, is that people are looking to securitize digital assets, and then the other end of that spectrum is, tokenizing traditional assets. And they're kind of contradictory, because I think, the tokenization in the way that Bitfinex Securities does it is it takes out a lot of the intermediaries. And I think maybe that's beneficial in some ways for players in traditional capital markets, but for some of the constituents, it just removes them completely. They're not necessary. So where do you see the interest coming? Is it? I have a feeling that a lot of kind of the Wall Street types, that their interest in tokenization is because they want to fire their back office and increase their margins. Is that what you see for it, or do you think this will emerge as kind of restructuring of capital markets with things like, like, are custodians necessary? Are central depositories necessary? Do you think these kind of questions are being asked, or is it kind of more like, we want innovation, but we don't want really anything to change very much?
So it's a bit frustrating as an answer, but I would say both. The first one, in terms of focus, is really how do I increase my revenues by approaching new markets, and how do I find new distribution rails. So this has been the case, for example, with BlackRock, bringing traditional finance products to the crypto asset ecosystem. And it's been really the shift that happened, and the focus that is now the case for 90% of financial institutions, is to go for new markets. The second, and I would add on this, that we have estimated that by 2035, it will represent 15 to 30% of major financial institutions' revenues. So it becomes not only a small new market representing 5%, it will become a huge topic of digital transformation across these financial institutions. And this opens as well the second point. So the second point is, as you said, operational cost reduction. So, for example, JP Morgan has published that for their intraday financing on the repo use case, they were able to reduce by 56% their operating costs.
That's such a much more diplomatic way to phrase it than I phrase it.
Yes. So this is a major shift in terms of competitive advantage, because if in 5 years your financial institutions has 50% more operating costs on 15 to 30% of the business, it is a critical risk, I would say. Yeah. Then I would say that these financial institutions, how do they respond to that? The financial institutions have many types of entities with many different roles. And we have seen, of course, a big risk for major depositories, where by shifting the intermediary, we see typically that we don't really remove the intermediary, we typically replace it with a more efficient or smaller participant. And we've seen, I mentioned 56%, but we've seen up to 70% cost reduction on certain, for example, distribution of funds with certain players.
Yeah, that's interesting. I mean, I think that's certainly part of our value proposition, is that we think that, we've actually got a much lower cost structure because of the technology. And that lets us go into markets that are kind of, underserviced by traditional capital markets, places like Latin America, places like Central Asia, places like Africa. And that's kind of where we see the opportunity. So that's interesting. Yves, how do you think how has the Bitcoin ETFs, how has that changed the investors that you talk to, their willingness to invest in Bitcoin? You mentioned some of the pushbacks and criticisms you've got initially with your fund, and one of the classic ones is volatility, right? As people would say, it's just too volatile, I can't do this. How do people approach that now?
Okay, in fact, from a volatility point of view, I would not say it has really changed. What has changed with the ETF is really about the respectability of the assets. And in the beginning, really, it was not a respected asset. Now that Fidelity, BlackRock, Franklin Templeton, Invesco has launched ETF based on that, nobody can anymore say it's not a respectable asset. The point of view of volatility is extremely interesting, and it was really a pushback in the beginning, much more than it is today. Usually when I do a presentation about the Bitcoin, I always start with a warning. And the first warning I give is I have a very bad news, which is that the Bitcoin is very, 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 very volatile. Now, the volatility of the Bitcoin is something that goes very often beyond the 100% volatility. It's huge. To give you a scale, the Lehman Brothers share did not cross the 100% volatility the week of the bankruptcy. So it's really a different dimension. This is the bad news about the Bitcoin. The good news, it is that investing is about taking risk.
Yeah.
This is what investing is about. There is a sentence that you should never be allowed to rationally pronounce. The sentence is, it's too risky for me. If something is 10 times too risky for you, buy 1/10 of it. Buying $10,000 Bitcoin is much less risky than buying $1 million of S&P.
Yeah, it's
a
all about
sentence that simply doesn't make sense. You should never say it's too risky for my clients. It's a question of proportion.
Yeah.
You know, I was interviewed by the French Senate about 10 years ago or 8 years ago. So in front of all the teenagers, in order to give them a conference about the Bitcoin for them to understand what it is. And the chairman asked me, but the Bitcoin is very volatile. What's your reaction on that? I told him, you're right. It's very volatile. Bitcoin is like chlorine. You know, chlorine is a combat gas. It's very dangerous. But if you put 2 drops of chlorine in a glass of water, you will have drinkable water. And Bitcoin is the same. If you put 2, 3, 4% of Bitcoin in a 60-40 portfolio, it's going, in fact, to lower the volatility of your portfolio due to the fact it's uncorrelated to classic assets. So this is the way we address volatility. It's wrong to consider volatility before you decide to invest or not. Whenever you want to decide whether you want to invest or not, you should only look at the investment thesis. And if you believe in investment thesis, you should invest whatever the risk is. The risk is only here to scale the size of the investment. So whether you will put 5%, 10%, 50%, or 1% of your asset will depend on the risk, on the volatility. But whether you invest or not has absolutely nothing to do with the volatility.
Yeah, that's such a great point. I think that's such a great point. And are people more receptive to that now? Do you see more interest from some of your pension fund clients and more mainstream institutional investors?
Well, again, I have unfortunately to confess that there is a border in the middle of the Atlantic. In Europe, those who are receptive are the very large monofamily offices. So one of our first clients was an extremely large monofamily office in France. They stayed with us for a couple of years, and then they hired their own crypto traders, and they have now a desk for themselves. Then we have multifamily office, but unfortunately on the institutional side, it's been difficult. I believe that the European Central Bank has done an extremely poor job in many dimensions. So the ECB has done a very poor job in so many dimensions, completely failing in their only mission. They have only one mission, which is to protect the value of the euro, and they have failed miserably, as you know. They onboarded other missions that are anti-constitutional, and this, increased their failure. And in addition, they gave their opinion on Bitcoin and on this kind of things, and unfortunately, it's costing Europe a lot. If you look at the landscape today, you will see that on the banking landscape, Europe is a disaster. The largest European bank has a size of 1/5 of JP Morgan, 1/5 of Morgan Stanley, 1/8 of Bank of America. We don't have any major bank anymore in Europe. We don't have any internet company, major global internet company in Europe. And thanks to the ECB, we'll not have any major crypto player in Europe. So it's really a disaster. It seems that they are not changing their mind with relation to AI also. They have decided to start with regulation instead of starting with business. And this is costing Europe a huge gap of growth.
So what do you think of that in terms of how this opportunity is skewed? Because Bitfinex Securities is licensed in the Astana International Financial Center in Kazakhstan and in El Salvador. And neither one of those jurisdictions is considered a a traditional financial hub, right? But these are places that are willing to understand the technology, embrace the technology, and I think potentially could be some of the big winners of this technology, specifically tokenization and the application of digital asset technology to things like commodities and securities. Do you think the opportunity is skewed to these kind of like smaller economies and faster moving jurisdictions relative to the traditional financial incumbents?
No, I believe no. I would like Alexandre completely distinguish between the technology and the assets. It's the best way to understand the difference between the asset and the technology is to look at internet in 1996.
Mm-hmm.
I imagine where we are in 1996 and we decide to invest in the internet. In 1996, it's extremely difficult. You will end up buying Yahoo, buying America Online, buying Netscape, buying France Telecom. And none of them were good choices when in fact the investment thesis was right. So the technology, you were right on the technology, you were wrong on the assets. So in terms of technology, I think that Europe is not bad. We have good players in terms of technology. Switzerland, you did not mention about Switzerland, but typically Switzerland is really a land of a heaven for this kind of things, for many things, but for this kind of things as well. You have also some French players that are not negligible. Ledger, typically Ledger is French. We have in the field of NFTs also, we have good players, Sora, etc. My point of view is more on the assets, on the Bitcoin itself. On the Bitcoin itself, today, I think the Bitcoin has completely changed status in the US with the ETF. We have now, two candidates for the White House that are saying the Bitcoin will be American. And Donald Trump did say that, and Biden is trying to say the same thing. So now Bitcoin is becoming an ordinary asset. And it will be, I'm absolutely sure about it. Most of the assets of the world are bought via a layer 2. Nobody buys, plenty of people will buy equities in the US, but most of the equity will be bought via ETFs, via mutual funds, via 401ks. So it's a layer 2. And I'm absolutely sure that at a certain stage, plenty of Bitcoins will be bought indirectly. A layer 2, an obvious layer 2 is Lightning. Another layer 2 is exchanges. People will buy and will store, fortunately or unfortunately, their Bitcoins in exchanges. They will buy it through ETFs, etc. So I really believe that the dissemination of Bitcoin is going to be accelerated via second layers, like Lightnings, like ETF. ETF and Lightning is roughly the same kind of things. It's a layer 2. You don't own the Bitcoins directly, but you own certain virtues of the Bitcoins. And this is going to accelerate in the US. It has already accelerated. Today, about 85% of securities in the US are owned via funds. And I think it's going to be the same at a certain point for Bitcoin.
Do you think those institutional players that maybe start purchasing ETF shares, do you think that eventually they will move into, just like you mentioned, you had a large family office that initially bought your fund and then they eventually started trading themselves. Do you think more people will do that as they understand the benefits of Bitcoin? Because I kind of feel like the price appreciation of Bitcoin is a Trojan horse, right? You come into it, you don't fully understand it. The 1% allocation you give it, it becomes 10, 15, 20, 50% allocation. And then you start doing a lot more homework on it and you realize, okay, it's got this whole set of other properties, censorship resistance, all of this stuff, decentralization, and I should really be custodying this myself. Do you think eventually the ETFs will kind of lead to that kind of understanding from people? Or do you think, traditional regulations, mandate restrictions, that will just keep people from, keep people in the traditional world?
I really believe that the threats of centralization are not the same across the world. You have to simplify the landscape. I would say that you have two kinds of governments across the world. Governments that are really trying to be at the service of their people, and some other governments that believe the people is at their service. If you look at the way things are perceived in China or in the US. It's two ends of the spectrum. I believe that there are plenty of things you can criticize with regards to government in the US. We are not still with the same kind of landscape as in China or as in some other autocracies. I believe that the value of holding your Bitcoins directly in some autocracies make plenty of sense. Holding your Bitcoins directly in the US has plenty of merits when compared to exchanges. But when compared to funds or ETF, it's a different story. When you own a fund, you own the assets of the fund, in fact, and you don't have an additional credit risk in the layer 2. When you own a note or an IOU on an exchange, you don't own assets. You own only an IOU. If you own a fund, it's a different story. And ETF, the most secure way to own any kind of assets is via a fund. People believe that an asset management company manages a fund. In fact, a fund is managed by a consortium of custodian, administrator, auditors, and things are relatively secured in a fund. And I will believe that, it makes sense for many people that are not as financially educated as others to own things via funds rather than to own them absolutely, completely directly. And I believe that the Bitcoin is also more compatible from a capacity point of view, etc., to be used as a layer 1 in a financial system which includes layer 2, rather than to be owned by every single individual in a direct way. And Lightning is a good proof of that, because Lightning is definitely a layer 2.
Yeah. Yeah, but I think we've looked at Bitcoin historically as a disruptive technology, right? And I think its disruptive potential comes from the ability censorship resistant and being able to send transactions to anyone, anywhere, at any time. But seeing Bitcoin being kind of eaten by Wall Street and just completely absorbed into the beast, is it still disruptive technology?
No, the main disruptive thing in Bitcoin, it is the fact that it's limited to 21 million. And it's peer-to-peer. It's really about being peer-to-peer. Why decentralization is important? Because of this book. That's a book written by Friedrich Hayek. It's called Denationalization of Money. In fact, Friedrich Hayek explains in this book that any kind of group of people that are provided with the monopoly of money issuance will fail. Because they are going to accumulate such a power that at the end they will be distracted by their initial mission, and they will have other missions, and those other missions will always come at the expense of the first mission. And this is why money will systematically fail as soon as it is administrated by people. Bitcoin is not administrated by people. The fact that there are 21 million of it is something which is extremely stable. And this is the eureka moment. It's when I discovered that Bitcoin, you buy a Picasso, you put it in a safe, and 10 years later, when you will open your safe, again, you will be richer. And this is what Satoshi has been able to create. It's absolute scarcity. And the fact that it's decentralized, in fact, it's not that it's decentralized, it's inert. Its governance is not distributed. There is no governance because it doesn't need to be governed, like a Picasso. It's something which is absolutely inert, and it's digital in addition, unlike a Picasso. Picassos are not digital, so it's difficult to own, it's difficult to exchange. Bitcoins are much more easy to own and exchange, but it's really about scarcity, I believe. The difference between Bitcoin and the others, by the way, like Ethereum is not inert. Ethereum really needs a governance. They were inflationary, they became non-inflationary, they were proof of work, they became proof of stake. And there is a conflict between the industrial role of Ethereum and the fact this will always be contradictory. And Vitalik Buterin had always said that if he had to choose, he would always favor the industrial role of Ethereum versus, the storage of value role. This is why Ethereum is a different story. In my mind, Ethereum is really a corporation. It's really a security, while Bitcoin is trying as much as possible not to be a corporation, not to be a security.
Yeah, I agree. Alexander, what do you think? Where do we stand in this process of disrupting traditional financial systems?
Yeah, so I would very much echo Yves' comment on the phase we are in, which is the most important of the store of value. This is the one that differentiates Bitcoin from all other assets. And it is the phase we are in, and it is institutionalizing and very fast. So I would just nuance maybe a bit because of what we are seeing with claims that is not already public. There will be a lot of movement in Europe as well. It has started. You have seen a few German banks, but this will continue over 2020, 2025, 2026. So really, it's an institutionalization, financialization for these 4 years to come of Bitcoin as a store of value. And it is becoming slowly but surely, gradually, then suddenly, the best recognized, because it is already, but recognized from an institutional point of view as the best store of value, of course, with the right risk management procedures that everyone should take. So this is the first phase that we are going to see over the next 4 years. And it has already started within the Bitcoin circles. But in terms of institutional adoption, there will be a moment for Bitcoin as a medium of exchange as well. And I would argue that over a certain period of time, if there is no scale in terms of medium of exchange, by that I mean institutional solutions to reach the 90% of the population instead of just the 10% we have today, we will have and will need, and there will be an emergence of institutional solutions. And that will provide another, that will reinforce as well the store of value case, and as well the reinforcement of the store of value case. People will understand it not as an investment, but as a savings technology. And over time, they will use it more for payments. But this will, of course, take time. And then the third phase, I would argue, not 4 years, not 8 years away, but maybe 12, will be the unit of account. When you will have Bitcoin reaching levels of exceeding gold market cap and such, people will start to recognize it and to use it as their unit of account. Of course, Bitcoiners have already started, and we measure the world in terms of Bitcoin. But in terms of institutional adoption, I believe this will emerge as well. This because what if we had to make a distinction? We always hear about stable coins, but there is really no such thing as a stable coin. There is fiat coins, and there is Bitcoin. So I think today only Bitcoiners measure the world in Bitcoin, but over a certain period of time, maybe 10 years, maybe 15 years, institutions as well will start to do so. And it has already started with what is being done on Liquid, for example, on top of Bitcoin. There is now the ability to trade tokenized stocks with Bitcoin. And for Bitcoiners, it really doesn't make sense to sell a stock for fiat currency. Bitcoiners make arbitrage between an asset and another asset, and typically a Bitcoin against maybe a security. Today, it's very hard to find maybe over than NVIDIA a stock that has outperformed Bitcoin. But over time, as Bitcoin also becomes more mature and gains a lot of market capitalization and volatility relatively decreases, there will be more Bitcoiners willing to trade arbitrage between stocks and Bitcoin, and especially when a majority of companies will also have Bitcoin on the balance sheet. So you see this emerge with MicroStrategy versus Bitcoin, and over time with corporations adopting the MicroStrategy playbook. This will be also there will be an emergence of Bitcoin-based capital markets that people don't see yet, but that is emerging today. Today, it's only 10% of tokenized securities that are based on Bitcoin, let's say, on top of Bitcoin. And I would assume, given current growth that we observe, that over the next 5 to 10 years, this percentage of 10% would go to 30, 50%, and maybe towards more as well.
Yeah, go ahead, please, Yves. Yes.
Okay, I would like to nuance or to comment, if I may, a few things that you have said, Alexandre. Sorry. The first one, it is, when you are talking about the fact that one day or another, Bitcoin will not be only a storage of value, but it will be also become a medium of exchange. There is a paradox here that I always like to remind people about. It's called the Gresham law. I don't know whether you know the Gresham law. The Gresham law is usually in English, you say it this way, you say it's bad money drives out good money.
Yeah.
It is this phenomena, this paradox, that if you're in your pockets, on one of your pockets you have Bitcoins, and in the other pockets you have euros, and personally, subjectively, you believe that the value of Bitcoin is going to grow, and the value of euro, you know very well, is going to diminish. You have the temptation to systematically try to buy things with euro rather than to buy them with Bitcoin. So I think that, in fact, paradoxically, the more value you will be able to store in value, the more inappropriate the euro will obviously become as a storage of value. The more, in fact, it's not completely obvious that the medium of exchange role of Bitcoin is going to grow quickly. I think it will come, but at a very later stage. This is a paradox. So we don't need, Bitcoiners should focus a little bit less, I believe, on the fact that they want to buy things with Bitcoin. We don't need that to happen. For the time being, let's store value in Bitcoin, and let's get rid of our dollars and our euros as quickly as we can. And you don't want to store because they evaporate. What you want is to systematically imitate the strategies of governments. What do, governments? They borrow something that has value today, and they reimburse 20 years later when the value has diminished drastically. So you want to short euro, and you want to short US dollars as much as you can, because you know very well that when you will have to reimburse 10 years or 20 years later, it will be worth nothing. Yeah. And this is really a very important thing in my mind to have in mind. The other thing is about the parameters you described, Alexandre. You talked about volatility and price. I usually say that Bitcoin is governed by 4 parameters: the price, the volatility, the correlation, and the adoption. And the interrelationship and the relationship between those parameters is extremely fascinating. Because of the 21 million thing, of course, price and adoption are very much connected. If more and more people want Bitcoin, the price will go up because of the 21 million. This is completely mechanical. Why is Bitcoin so volatile? Because today Bitcoin is not really a currency. It's a project of a currency. The day it will be really a currency, the day it will be a standard way to measure value of things, the Bitcoin price will be probably close to $2 million. Today, Bitcoin is a startup. It's a project. Bitcoin is Google in 1996. And there is something nobody knows how to do in this planet. It's how to value a startup. the evaluation, the pricing of a startup is something impossible. How much is Google worth in 1996? Something between 0 and 2 trillion. Okay, and the more the zero scenario lowers in likelihood, the less the volatility will be high. And in order for the zero scenario to diminish drastically in likelihood, you need adoption to increase. So you see that the relationship between adoption on one side and price and adoption and volatility is in fact completely opposite, which means in fact that the real dilemma is whether you want to buy Bitcoin now that it's risky, or whether you'd better wait for a few moments, for a few years until it's less risky. The problem is that if you wait a few years until it's less risky, it's going to be more expensive.
Yeah.
So the real dilemma is, do you want to buy it now that it's risky and cheap, or would you prefer to buy it later when it's less risky but much more expensive?
Well, it comes back to positioning, and it's the Hal Finney comment. You know, it might be worth getting some in case it catches on, right? You know, and it's about positioning. You buy what, you know, will let you sleep at night. I think that's exactly, I think you nailed that so well at the beginning of the conversation.
The
I
last
think you
topic is correlation. Maybe I can say one word about correlation.
Please.
You know, people tell you the Bitcoin could be is not so much uncorrelated. In fact, two comments about correlation. The first one, it is that I'm a statistician by background. And the first thing they tell you when you study statistics, it is that you should never give a statistic without its significance. So you should never say the Bitcoin has a zero correlation with the S&P. It doesn't make sense. Nothing has a zero correlation. If I play heads and tail with you, Jess, at the moment I will have 10 tails and you will have 10 tails. My volatility will be 0, your volatility will be 0, our correlation will be 1, but it will not be significant. The real sentence about the Bitcoin, it is that the correlation of the Bitcoin with the S&P is not significantly different from 0. It's not 0. Of course, nothing is at 0 correlation.
Yeah.
But at the moment, it will be 20%. At the moment, it will be 70%. At the moment, it will be minus 70%. It's not significant. Why is the Bitcoin uncorrelated? Because of two phenomena. Because in fact, the future of Bitcoin is already known. Either 20 years from now, the Bitcoin will be worth 0, or it will be worth nose to $2 million. If it goes to 0, it will go to 0 alone, and its correlation will be 0. If it goes to 2 million, it will become a safety haven. And by definition, when is it that you shelter in the safety haven? When it's raining outside. And whenever that you get out of the safety haven, when it's sunny outside. So by definition, whether it fails or whether it becomes a success, its correlation will be extremely low to the other assets.
No, that's interesting. You also said something interesting at the beginning too about you know, the propensity to spend Bitcoin and it becoming a medium of exchange. I think that's one of the most interesting things about Bitcoin is the time value of money concept and how Bitcoin kind of flips that on its head. And I think this segues really nicely into sustainability, because I thought that that's one of the greenest things about Bitcoin is that your propensity to spend and consume and waste money is less on a Bitcoin standard, because your understanding is that Bitcoin over time will go higher. So you're reluctant to consume. And I think that flips the time value of money kind of on its head. How do you think of Bitcoin in terms of sustainability? I know that's one of the focus for your fund.
You're talking to me, I guess. Huh?
Yes. And
so in terms of
sorry, Alexander, we'll bring you in after this.
Yeah. Now, in terms of sustainability, you have many aspects of sustainability. You know, plenty of people, sustainability, in fact, is ESG.
Yeah.
Most of people will focus on E, which in my mind is absolutely wrong. You should not focus only on E. S is extremely important. If you invest in Russia, if you invested in Russia 5 years ago, you would have lost everything. Okay, and it has nothing to do with E. It was really the S that was the problem. It's very important to invest in democracies rather than to invest in autocracies, because autocracies are almost by definition unsustainable. They always fail. So, but you did not mean sustainability. You meant, I guess, E. So let's do. Our fund, in fact, had got plenty of negative reactions in the beginning because it was really a pioneer. And one of the reaction was, you're going to pollute the planet, etc. You're going to release plenty of CO2.
Oil the oceans.
Yeah, this is why our fund is called, in fact, the TOBAM Bitcoin CO2 offset fund, because we systematically offset the carbon footprint of all of the Bitcoins we buy. Offsetting is not something which is extremely expensive. So we systematically pay for that ourselves. It's not the fund that pays for that. And we systematically offset that. Now, there is a problem with some Bitcoiners. They believe that Bitcoin will cure cancer. In fact, Bitcoin will not cure cancer. And Bitcoin does not cure cancer. Bitcoin does not solve all the problem of humanity. And with regards to the growth of the economy, which could be unsustainable, etc., I'm not sure, in fact, Bitcoin solves this problem. Why is that? Imagine I write on a piece of paper to Alexandre Laizet, I will pay the holder of this sheet of paper 1 Bitcoin whenever he presents it to me. Is this paper worth something or not? It is worth something. So in fact, the Bitcoin is going to recreate over it a financial system. And you will exchange debt in Bitcoin, and the money supply is going to increase even in Bitcoin. So you will have 21 million real Bitcoins, but you will have IOUs in Bitcoins are going to be issued. And this will also fund the economy, because we want that. In order to fund the economy, we need that. And if you want to buy an apartment, if you want to buy a car, very often you need that. If you want to create a corporation, a business, you need that. And Bitcoin is not going to change the rules here. What Bitcoin is going to change the rule of, it is that we will have a standard. The same way that gold was a standard, you will have a Bitcoin standard. At a moment in time, there is some kind of a truth that you will be able to trust, unlike the job that the central bankers are doing. Okay, but there will be banks in Bitcoin, and those banks are going to issue IOUs in Bitcoins, and this will not prevent the expansion of the economy. This is my subjective opinion, at least.
Alexandre, how do your clients approach the, some of the environmental criticisms of Bitcoin?
Sure. So on the sustainability piece, I think it's quite interesting, in fact, because if you look at actually the definition of what is sustainable, you will find that it could be the definition of Bitcoin. It's sub. It comes from sub and tenere, which is at the end of the day up from below and holding. And the word hold comes back a lot. And it's holding something that's capable of holding its value over difficult times and the ability to bear it over a certain amount of time. The second definition I found was from the World Bank, was the capacity to maintain a non-decreasing quality of life. Well, it's exactly what Bitcoin allows you to do. And in fact, it's even a growing quality of life if you measure the effects around it. So coming from the definition, I would say that Bitcoin is the sustainable asset amongst other options. Then on the ESG front, I would very much echo that the E has been very much the focus instead of the S and the G. And I would say that there has been a before BlackRock and an after BlackRock moment with the strong investment of BlackRock in the ESG field over the years. BlackRock adopting the asset has been a very strong moment. And now the main pushbacks are not around typically not around ESG. Clients typically include the E of ESG, typically with tokenized green bonds or carbon credit programs. But in terms of Bitcoin itself, it seems like now there is no informed criticism on the field. And shout out to Daniel Batten on this with amazing research. I think we have now so much data proving the positive effect of Bitcoin on the sustainability piece that let's say the burden of proof has shifted, and now it's upon the critics to prove very specific points, maybe. Then on sustainability, I would like to add another element, and it echoes the discussion on the medium of exchange. I would say that even before store of value, the key element, and that's also why I came into Bitcoin, is freedom and its sovereignty of the individual. And Bitcoin is just the best tool for this. And store of value is just the most important aspect of this tool to help bring freedom and sovereignty. However, if we don't protect, and it's of course it's not more medium to long term, and if there would be a priority, now there is a lot of Bitcoin improvement proposals and all of that, and the debate is really is very important right now. I think we should always prioritize the store of value component and not make trade-offs against it. And as Michael Saylor puts it very well as well, the element of medium of exchange will come, and it might come best through layers as well. But this is very important in a context where we see developers going in jail for publishing code, and with the institutionalization, there is also a risk that we are going into like the internet with the dark web. We might be in there might be some risk of peer-to-peer transaction being very hard, like with what has Jameson Lopp described with the email, very hard to not go through the centralized platforms. I would say there is an importance, even if store value is the most important and is the condition for Bitcoin to strive. I would say that the capacity to have the medium of exchange is very important. I would also say that typically not using like the counter element that would maybe nuance the very right theory that you mentioned, Yves, on bad money versus good money, is that at the end of the day, if you are not using Bitcoin as a medium of exchange, you might be underallocated. Because at the end of the day, when you use Bitcoin as the store of value, and you are 99% allocated because it is the standard at a personal level, and will become, and I agree on the time frame, maybe 10 years and plus, I would say that medium of exchange will come, but it will come not necessarily with Bitcoin as layer one, but maybe through layers, and or as well through fiat coins being issued on top of Bitcoin. A prediction we've had is major stablecoin potentially will also come on top of Bitcoin layers as well. So,
okay. Well, I mean, that's already happened, right? We've got USDT on top of Liquid. It's still small, but I think, you know, this is something interesting that I've noticed on Liquid, is that Liquid is about to flip in the Lightning Network. So the Blockstream mining node has mined 1,200 Bitcoin over the course of the last 36 months. It matures on July the 4th, and those Bitcoin are going to be distributed on the Liquid Network. And I think that's enough to push the Liquid Network above the Lightning Network, which is super interesting. There's a lot of exciting stuff that I think is going to happen in the second half of this year on the Liquid network. Capital market stuff being built on top of Bitcoin. So yeah, I think it's going to be very, very exciting in the coming months.
So maybe if you wanted to add,
I wanted to comment on one thing you said, Alexandre. You said that you could be underallocated. I disagree with you that your goal is to have a 100% allocation with Bitcoin. I think that you should try as much as possible to have much more than 100% allocation. As I told you, you should borrow fiat. You should always open as many bank accounts as you could and systematically be a debitor in front of your banks. Buy something that has value today and will have more value tomorrow, so that you can borrow something that has value today and will have less value tomorrow. So the goal is not to reach 100%. It's to be at much more than 100%. And this way, you have no problems of underallocation.
We are not,
Alexander, show some conviction.
we are not in disagreement on this.
We are not in disagreement. Okay.
You mentioned the freedom aspect of it and individual sovereignty, and I've noticed that in the past you've described Web3 as freedom technology, and obviously there's a lot of pushback towards and skepticism towards Web3 in the Bitcoin community. How would you kind of frame the importance of Web3 to Bitcoiners?
So
and how would you define it?
Yes.
First of all, let's.
Oh, sorry.
Yeah, you were talking to Alexandre. Sorry.
Yeah. Of course, Web3 has been very much associated with fiat coins, to say the least. So the key thing in terms of definitions, again, Web3 was just a description to show that we had Web2, the Internet of Information, and Web3, the Internet of Value. And Bitcoin is the best asset and technology for the Internet of Value. However, Bitcoin, and it is good for Bitcoin, that there are other options in the market. And before being a Bitcoin maximalist, I'm more of a freedom maximalist. And I believe Bitcoin should win in the free market. And that what is good for Web3 in general, meaning developers pushing code using cryptography to perform transactions in the way that they want, everything in this matter is good for Bitcoin. Either it proves that Bitcoin is the best asset and technology, or it provides potential inspirations for its evolution. Or it proves use cases that are not valid, or it proves that use cases are valid. So overall, I would just say that Web3 is kind of misunderstood, and I understand why Bitcoiners typically say Bitcoin not crypto, Bitcoin not Web3, and all of that, and it's very much valid in terms of the perception of the meaning of the word, but from the strict point of view of Internet of Value and free market, I would say that all of Web3 is at the end good for Bitcoin, and people should make their own choices. Then I fully agree as well that not everything should be treated equally, in the sense that some practices in Web3 are not acceptable, and that of course, using, for example, tokens just to benefit from retail investment and not, let's say, have a respectful and responsible behaviors is not acceptable. But Web3 in general, I see it just as Internet of Value, with Bitcoin as a cornerstone.
Great. Well, we're at an hour here, so maybe the final question for the both of you. Looking forward, maybe the next 2 or 3 years, how do you see the integration between TradFi and the world of Bitcoin evolving in Europe? Yves, do you maybe want to start off?
Yeah,
Go ahead.
Go ahead.
In terms of future, your question, Jesse, is more on the future perspective of.
Yeah, how do you see, the world of Bitcoin meshing with the traditional financial system, and potentially your clients from more
Sure.
mainstream institutional investors?
Sure. So in terms of the perspective from our clients, you can expect over the next year or so more banks providing access to Bitcoin and other crypto assets. This is the main thing that is happening right now. And just a quick figure, already 85% of European and American systemic banks pragmatically allow access to Bitcoin or other crypto assets, either through the Bitcoin ETF access, through investment in crypto asset companies, or through other activities that they build using public blockchain technology. So you don't want, as a financial institution already, to be part of the 15% that don't that are not part of the wave of adoption of this new technology. I would say that banks are realizing that we are at an inflection point, and following Roger Everett theory of diffusion of innovation. Today we are at 5%, 10% of adoption. And over the next 10 years, we will cross the inflection point, the exponential institutional adoption takeoff across the 10 to 20% of the adoption of the technology. So banks are recognizing this shift, and they are positioning. They are starting with custody. They are starting with, of course, trading, the investment use case, and this will be the major business case for the next 5 years. And on the back end, they are working on digital money applications, mainly today with stablecoin, deposit tokens, and all of that. And as well on the tokenization of financial assets. And what I expect is a growing role of Bitcoin-based solutions in terms of not only the main business case for the next 5 years, but also on the tokenization piece, because I think there is some education yet to do on this front to see the benefits in terms of security, because even if you have other options that have more distribution today in terms of tokenization, you need to build on foundations that are secure and decentralized. And Bitcoin is the best technology for this. So I would say that over time, network effects will grow and move towards the technology and the asset that has the best security and decentralization. And of course, solutions like Liquid provide also confidentiality and modularity that is very well appreciated by financial institutions.
I think that's very, very well said. Yves, anything to add? How do you see these two systems that have historically been kind of walled off from each other? How do you see them interacting and integrating over the next couple of years?
I think that, again, I'm sorry, but I have to differentiate between what's happening in the US and Canada on one side and what's happening in Europe on the other side. Alexandre has probably a more documented point of view than I have with regards to the projects of the big players in Europe. But apart from that, today I have to say that it seems that the two worlds are completely converging in the US and in Canada. Today, Bitcoin is an ordinary asset in North America. For the time being, I think my perception, at least, it is that it's far from being the case in continental Europe, at least, and especially in the EU. I believe that the regulation that has been put in place in the EU in the last 2 or 3 years is not going to help consider Bitcoin very easily as an ordinary asset. But maybe I am wrong. So I am less optimistic than Alexandre from the point of view of EU. And with regards to America, the UK, Switzerland, I would say that the convergence has already started.
Yeah,
That's great. Well,
different time frames for sure in terms of the integration, to say the least. But it's coming.
Yeah.
As well.
I love the optimism.